Okay, welcome again. So just giving you a little bit of energy. Now, yesterday, I remember I did talk about this point, like the market it will come here and will give us a buy. Then you are gonna wait for the 15-minute shift or to take your entry. Okay. Now, for my masterclass students, understand what's happening. But actually, yourself, you may think you know what you see there, but you don't. Okay? You don't. Now, we see, if you look here, if you look at this point, right? If you look at this point, you will observe that we are having a market shift at this point. But though we're having a market shift at this point, we still haven't confirmed our area of liquidity, which is this one, this candle right here. And the issue here surrounding this case around here is that this is just a short-term pullback, okay? Okay. Now, to check the 1 hour, we have to break that structure for us to be bullish. Until now, the market haven't confirmed anything, and that's it on Bitcoin. So far, as I did talk also yesterday, this trade from a flip here, from this engineered liquidity we have in this round retest, and the market acted here as a strong word, told you as a strong resistance. Now the market did fall, and I did tell you that the market will make a new lower low, which we have got. Now from this point onward, we are looking for a 15-minute shift to take the trade of Bitcoin buy, and this trade will give us the new high on Bitcoin. Now, what is this again? Okay, so that's it. Basically, simple. Now let's look for some recaps on trades which happened this week. This week have been a slow week so far, and I was not actually very active in trading. Now let's look this pair. Let's check it. Okay. That was the area of liquidity. That one. Then you're gonna go to the, so this is today, this is Wednesday, this is Tuesday, this is Monday. How many pips? Okay, 148. Not bad for growing your capital. Then let's go to 1 hour. Now let's look here. Now, if you are in the masterclass, then you understand what happened here. Okay, you understand what happened here. Now, those people who use indicators, they call this a divergence. Okay, but actually, you may call it a divergence, but if you don't understand the price action, you're going to have a trouble. Okay, now this was the finishing of the liquidation. Okay, then we're going to go to the 15-minute to look for the entry. Now, when you look at the 15-minute, you're having this lowest point and you're having this shift point at this level. Okay. Now, this is a point where we are having a market shift. Now, if that's the case, then we're having these areas of liquidity, 1, 2. The market was moving up and where? Okay, here. Then we have to check the daily also again before we move to the other time frames. Then we notice when the market was moving up, we had a daily gap at this level. And since we're having a strong momentum, we're going to anticipate the market to dip into this. So I'm going to give it a separate color, which is green, like that. And so far, if that's what we're anticipating, then we're anticipating to see a market coming all the way to here. Now, the market may give a minor pullback in 1 hour time frame and may continue going up if it's bullish. Okay, let's check the weekly. Those are pulls. Now, let's see. If you go back again to the 1 hour, you will notice that the market actually came to the 50%, tried to make a sell, but it did come to what? To the week-to-week area. Now, in this week-to-week area is a place where you're going to look for your selling setup. Okay. Now, let's look for it. Let's go to the 15-minute. Now, in 15 minutes, you're having a market shift at this point. At this point. Okay. And after you having that market shift on that point, you're having areas of liquidity. But if you look here, you will notice that this area have acted as a strong what? As a strong resistance or support. Now the support, if it's broken, then we're going to take the trade on this area. Okay. You understand what I'm saying? Now, after that, then the market. So you may refine this using the 5-minute or whatever time frame you may use. As you can see here, the market took the entry based on the special case. Okay, but you can mark just this liquidity flip on this point, and it will be enough. And just put your 15 pips stop loss. That's 7. Okay, that's all right. 14. That's your stop loss. Okay, let's look your take profit. Now you can look up to 1:4. That's like 60 pips. Now this is like 50. That's enough. Okay, you can take that. Now, since this pair has very, very low pip value, then you may anticipate something like at this point, you may anticipate to take your partials 1:2. Now, I'm teaching you to be an intraday trader here, not to be a swing that I teach in masterclass. Okay. Okay, so up to this point. Now I have to check again the 15-minute because this is just a minor pullback. It's a short-term. It's short-term based. Okay. Yeah, it's short-term based. Now the market came to here, then it's just continuing going to the take a profit. Okay. As you can see, the market is continuing to move to the take a profit. Now, after all this, after you have noticed just the 15-minute shift, you have to get out of the trade. Okay, now this was your buying point also. Okay. Yep, because the bias is not bearish actually, it's bullish. As I've shown you in the when I was doing the analysis. Now I want to explain a lot of things here. I don't have to repeat this to say this a lot of times, but as you can see, if you look here closely, you may try to be sneak that there is a, but this is your liquidity engineering, which is a reactive one. And if you turn to look here, there is no flip actually. There is none. Let's look to 1 minute. There's no liquidity flip, but there's a reactive liquidity engineering which you may use for your entry. Now that was it. Now, after you have taken this buy, now you will hold into it, hold on to it. Now it's 3 pips, 40 pips, 46. So this was today. So like this is just enough for you to continue growing your capital. And now if you have taken this buy at this point, you're anticipating to see what? To get over here 60 pips or even further. Where this pair is at all times high, or is where? At all times high, right? Now trading pair at all times high is not everybody can trade pairs at all times high because their strategies suck. Okay. Yeah. If your strategy sucks when pair at all times high, you don't know how to trade them, then that's the issue. The problem with your strategy. You have to have a strategy which can trade regardless of the pair where is at all times high. Okay. Continuing buying or selling, whatever the case, you have to have that strategy. Now you see we have finished this. Let's look another pair which we did have. Trade S&P. Now today, here's how much? Friday. This is what? Monday. And we found we're having this area of liquidity here. And this pair is at all times high. Okay, it's just a simple matter of you just going to cut here because you have finished the weekly liquidation. Then you're gonna go to the 15-minute, which is your master time frame for entries. Now, after something like this, then you understand there's a liquidity flip on this. Now, have to refine. You're gonna have to refine with your entry point. Okay. And if you look here, this is our shift point and this is our free point. And let's see. Now we have a confirmed area of liquidity here. Okay, now you're gonna have to refine it. Seems like there is a special case. Seems like there is a special case at this point. Okay. Now go to this time frame. Or there and the liquidity left below. Sure. Okay. Then you're gonna chill. Wait and see what the market will do in this area. Now, this one is short-term one, short-term pullback. So you can buy even here on this one. Okay, let's look on 1 hour. Okay, so the 1 hour is very sharp and there is a shift. So if you're having a break of market structure, then in 1 hour, then we gonna have a little pullback in. So then our target want to be here. Is this confirmed? No. So we're gonna have to look our trades. No, basically we have to look at the trade, same position down below. Now, before you go further down, you have to observe shift flips above this area. If there are any kind of flips which may interfere the market to not come to the liquidity engineering, then if you look, you notice that one and this one. Okay, so we're gonna go to the 5. Okay, now when we're here, let's look, wait for the price to come down and see where will it reach. Now the price didn't come. Now that's not your problem. Just leave it as it is. Simple. Simple. So now you are not having any trade by that point so far. Okay, that's your entry. Okay, the entry actually will stop. Let's see. This, okay, this did break, so this price, so this is the one will hold. Now, one thing I did tell you is that when you are trading, is the concept actually is, you know, when there is a flip and there is a liquidity engineering, flips are the strongest among the liquidity engineering. So when there is a flip, you're not going to put your entry on liquidity engineering. Unless you have mistaken for a flip, then the market just did go to the liquidity. If the flip is stopped out, then you can look for the liquidity engineering. Or you have to look if you did press your flip correctly. If you did press it in the wrong way, then you're gonna be stopped out. So from this point here, I don't know how do they count pips on this pen. Is this 99 pips or 9 pips? 9 pips, I think. I think these are 5. It depends on the broker to understand the pip value. It depends on the broker. But most of the time, I understand this pair have very small pip value. It's just like Euro USD. And this may be something like 58, 100. Now, let me check on my broker and tell you the estimate pip value from that point. S&P, US 500. Let me look from my broker here. Okay, so basically, we have something like this. From this point to here, is 5 pips, okay? But if you find your broker have a very high leverage, like next we have S&P 500, a normal one, and we have S&P 500, which is its pip value is 100x. So like here, when you see 5 pips for it, it's like 50 pips. So like, let's say you are having a 0.01 lot on 5 pips, you're expecting to have like a 0.05 drawdown. Okay. But now here, we're going to have a 0.5 drawdown from this lot. So its pip value, it's 100 more times. So depends on the broker, how the pip value there. So normal pip value of this pair is just how much? It is just same like here, 5 up to here, 50. So if we're having 5, then here we're having how much? That's 48, 46. Then closing above here, that's 50. So that was the first take profit, 40, you're out. Now, because here, if the market failed to, after closing above, then you were out of the trade. You are not out. You are trying to observe the pullback to come in, then to go again up. Now, if the market will fail here, we're gonna see a pullback again to go down. Wait. Now, if you look here, then you have to observe the daily. The daily might have affected this pair. Yeah, sure. Now, then you're having that move down. And then after the move down, the big move down, what you're going to have to do, because now you have taken already your profit. Now, after the big move down, what happened is on the 1 hour now, let's look back. You're having a 1 hour shift, you're having this area of liquidity. Some people may think the market was going to be acting there. Now, if you look closely, okay, you have to check also the 15 minutes. Now you notice on the 15 minute, we had an inside formation, which was this one. And here you notice this area is that. Now, since the market also observed this point, so the market showed you are bullish. Also, so what we're going to do here, we're going to have to refine the points. If you are observing clearly, what do you see here? Let me remove this. What do you see? What do you see? I see this. Okay. So we're having this special case, and the market just moved, consolidated, and then moved with a strong momentum. So we're having that. Somebody else could have marked at this point. Now measuring the pips, what are pips there? 5 pips, 7. So in this pair, you may use actually to 10 pips because of its pip value. So you list less because in its time frame, you use a lot of space, but few pips. So you may put your stop loss by 10 pips. Okay, so that was the entry point. Now you will chill and wait. So somebody could have pressed the entry here, somebody else there. What was your pip? Now there was your entry. And this drawdown is how much? Almost 6 pips. Then the market continued to go. So this was one trade which you are having in this week. And if was your take profit there is how much is that? That's 100 pips. That's enough. Okay, now as you can see here, this pair have rejected, and if you look, let me move this. Okay, so now since I was now you can see this pair rejected, came down to liquidate. Now since the pair have already given a confirmation again, and there was another buy at this point. Why? We're going to take a buy and not from not from any other points. Here, I was not going to take the buy actually for my own reasons. Now, if you press it in 1 hour, masterclass people understand what's happening around. Now, this pair is still bullish, okay? So if somebody did hold this trade, how much is that? 160. Now here is 140, okay? So expecting new highs. That's 200 pips, guys, okay? It's a slow week, but it's good. This is your another entry. Risking 10 pips, just taking 10 pips. Okay, now this was a little bit in. Now you can see this did a round retest, okay, and it did deep further. Now, for those who are afraid to take the trade, they may use confirmation, shift point here, confirmation of the shift. You're having this flip, taking the trade here, which now is up 20 pips. So somebody else may have taken the trade right there. Okay, so that's 20 pips. That's 20 pips, guys, from what I've been teaching. Now, the reason for this dip is because of the round retest. Now, that's why you have to understand the candle history, the area of liquidity history. If it's coming from a flip, it may not just end there. Okay. One thing when you are, this is for the masterclass. There's one thing on the round retest, which I did teach on the masterclass. And that criteria, if you look here, I don't see it. It's not present. Okay, you know the actual point in which the round retest may occur. Okay, you know the actual point. Okay, and if you look here, you could have taken your trade based on this enough, or here. Okay, for the issue of a round retest only. So if you press it right there, this is 10 pips, 12. Okay, basically use 15, the normal one. Okay, then that's it. Then the market is going up. Now let's go to check another pair. Japanese. Check it on the daily. We are experiencing the same conditions on these indices. If you look here, actually the previous week this pair came from this weekly gap. Okay, and not much of that. You will use this one because of the nature of the momentum. I did teach you in the regular class on this YouTube mentorship. I've talked about this, how to look at the conditions of the gap. Now, after that, we check on the daily what we have. If you look, you can use the 15 minutes now to take advantage of this, since the market also did have a rejection. Now, you can see this candle rejection. So this was the liquidation of it. Okay. Now, this rejection is a what? Candle rejection. Okay. Oh, no, this is an area of liquidity rejection. So the market rejected this area of liquidity, indicating buyers have been supported, have been held up by the support line. Okay. Now, since they are supported with the market, then the market will continue to push up. Okay. Then the market pull down, but if you're in a masterclass, then you know where to take your confirmation, to take the trade. Okay. But for you guys, I will recommend just taking that one. Okay, taking that one. Just using the higher time frame liquidity engineering, which was a liquidity inducement at this point. But the masterclass members understand by checking these wall time frames. Okay. Yep. So they had a rejection in the market. You can't trade actually this from the pullback. You can actually have to understand what happened in the previous day, week, to understand what's happening now on that day. So now you're gonna have to go to the 15 minutes to look for an advantage if there is. You don't force the trade, you wait for the market to align itself with your conditions. And if you look here, we're having this area of liquidity. My masterclass students, I'm sure you understand if you are watching the videos. These videos, I have marked the way I've marked it. It's not for the YouTube. I've marked it a random. Now you can see we have a 15-minute shift. We're having this area of liquidity. And if markets try to liquidate this, not it at the whole, let me go 1 minute. So any pullbacks here, we're going to consider them as a round retest on this. On these points, we're going to consider them as a round retest. And if the market will not reach up to here, then we're going to anticipate like a short-term pullback. Okay, now let's see. Now that's a short-term pullback we are going to see. So if it's a short-term one, this is enough for us to take the trade. Now we're going to have to define it. Go to 1 minute straight up. Boom, 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 boom. Okay. Now, if you look here, we're having a lot of things. If you look here, we're having a lot of things, and I might have to go. Need to go to user 5 now. So now basically I will use this. I will use this point. And if the market will not come to my entry point, then I will not take the trade. Okay. I will not take the trade. Okay. I will not use this. I will use this one as my entry point. Now, after that, then the market, if you are, you may use this. But now you have to understand that issues of short term, you have to understand the trade is short term or long term. And if you don't understand that, if you don't the issue of understanding the trade is short term or long term, you're gonna have to be in the masterclass. Now you can see the trade, I think, missed a few pips, but the market is always correct. So I am the one who have made a mistake here. Yeah, I am the one who made a mistake because there is a special case here. Right there. Okay, so the market came for it because left as an engineered liquidity. So if you are careful, then that was your entry point. Take that buy, and the market, you're anticipating to see a new high above that point. If you don't find, if you will not see the new high, then you don't want. You get out of the trade if the market rejects this area. If it will not break it, you get out of the trade. But if it's it breaks it, then you'll stay in. Then after the pullback, then if you look here, you're gonna have this as your area of liquidity inside formation. And believe me or not, there is a flip here. You can go let me show you. Let's go to 1 minute, and If you look closely, you'll notice we're having this. We're having this one. And we're having this. Now, I have to point first where there was the 15-minute area of liquidity. Where is it? Okay, now 5. So it's somewhere here. It's already tapped. So tested, but left an area of liquidity. So not bad, but that's your key point for you to take the trade. Okay, not necessary for this. So then you will wait for the market. You will looking this area. You may take the entry at that point straight up, or you may wait for this last point. So whatever the case you may choose, it's up to you. But this one is already has been tested. Now you see the market came to the last one, and which the market engineered the liquidity 1 pip, 3 pips, and the market favored you. So you this was another take profit for you. You just have to make your own rules. I can't tell you the rules. You have to back test it and make your own rules. Now, this pair is very high volatile. Okay, and now back to 1 hour. We're anticipating to see the 1 hour shift at this point. Now, let's spread the price. Now here we have to look the daily. So now we see this is something you don't want to see. Now, after buying here, you're supposed to get out of those of at this point. Now, how much pips are those? 138. Basically, in some brokers, that's 1,000 pips. Okay, 1,000 pips in some brokers. I've tried to trade some brokers, a lot of brokers, many of them that like there's 1,000 pips. So like you have taken three trades, you have taken one, you have taken two trades, 2,000 pips. Okay, then after the market have come down here, you will use again the 15 minutes for confirmation and take a buy again. Okay, now that's what the entry. Now here again, since you have the shift point, we're having the areas of liquidity. If there are any pullbacks, you're gonna take the trades. Why? What happened here? This is just basically flip. And I can explain to you. If you found an area of liquidity, now this is a free tip like this, and you see below it, there is a flip, then mark the flip as your entry, not the area of liquidity. Okay. So this was another entry. I've taught this in my masterclass. So that's a free giveaway tip. Okay. Now allow the market to go. Now, when you're taking some entries like this, you have to understand what you are doing. Okay, now if you did take the trade here, you are gonna observe this. If the market closes above this, you may do a pullback, but you have to know the goal of the market from the down point. Now, from there to now, how many pips? 140, and other brokers 1,400 pips. So you're anticipating to get a new high, which is something like this. Okay, so that's another pair. And let's see US30. So in US30, let's check it on the weekly time frame. So if you look here closely, you understand that this pair is at all-time highs. Since we did have a rejection at this point, this pair was obligated to give us a new high, have a short-term pullback, then continued making high highs. And now, based on the monthly time frame, now we have to confirm if we are still bearish or we are still bullish. And from what I see is we are still bullish. Okay. Now you are supposed to take the advantage of this movement from this point. Okay, now if you look here, at this point, you're having the pools. Then what you're gonna do is you're gonna have to take the 15-minute shift. Now, this is today, yesterday, Tuesday, Monday. So this is Monday candle. See a long week after the market have come to contact with this week to week, as the area of liquidity I did tell you. Now, after the gap, you notice a strong momentum. I've taught you this, guys, on the YouTube mentorship in this YouTube mentorship. So all these link-ups, I will be uploading them so far. I think I will be putting them in the masterclass. No, in the YouTube mentorship playlist. Now, if you look here, you have something like that. So now you have to take advantage of this. Okay. Now let's cut some candles here because we don't have time to waste. Now we're gonna go straight to the 15. Now looking at the 15 here, nigga. Hey, nigga, look. We're having this area of liquidity, which was confirmed. And now we're having this reactive. Basically, that's your entry point, and you can see the market buying. Now, since we have a gap, then we're going to have a short-term pullback in 1 hour. And for us to get out on this trade, we have to consider something. I'm not going to talk about these things. Okay, now, if you did take that, why did you take that? You're having already the 15-minute shift, which is where here. You're having the shift point here, the candle of no wick. That's your shift point. Here. That's your shift point. Okay. Now, since this was a whole transition, then until the market confirmed the area of liquidity at this point and gave a short-term buy, then this was a buy, which happened. Now, since I will not talk about this. Let's proceed. Now, the markets keep going up. Now, we're having this area, but if you turn and refine this, you may notice it may have a flip. Okay. And if you watch closely, this might be your entry point. Check again in 1 minute. US30 is so volatile. So take the trade at your own risk. That was the entry, or you can use, somebody else could have used this one. Whatever you take, okay? It's up to you. Now, looking here, having this area. See? Now, I'll just, for this area, we use that. So I'm not gonna take this. Let me check it also in 15 seconds. There's something to what? Okay. Nothing to see, nothing obvious. So back to 15 minutes, I will just play the price. And if I will notice any shift in 5 minutes, then I will take the trade. Now I'm gonna have to wait, patience. Round retest, okay. Let's be patient, okay. Now, now, back, let me go back. The pullback from the gap here, you have to take the trade based on the 15 seconds, right? Now, if you go back to the 15 minute, not seconds. Now, since the market reached the 50%, if it shifted on 15 minutes, you are supposed to do what? Get out of this trade, okay? Yep, that's it. Then the market came all the way down. Now, check again the daily. Since the market is dropping, then you're having the higher time frame liquidity engineering on daily there. So if you see any market shift on 15 minutes, you're gonna take the buy. Okay. Yep. That's it. Okay. Market reached there, then we're gonna have a 15-minute shift. And the market just continued now. Let's allow the market to go. Okay, all the way there. Now you can see the market came and there was an engineered liquidity there, so I have to consider that. Now here is like 60 pips, so you're never going to take this. You are going to wait for it to dip, 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 dip. So it didn't take you, just chill, wait. If the 1 minute keep pushing up, just wait until it slows down like this. Now, after the 1 minute shift, here is your entry point. Perfect. And the market dropped. Now, this just short-term buy. Okay, this is just short-term. Now, check the 15 again, since we did come. Okay. Yep. And let's see if the market would break here, then we're gonna go more down. If it doesn't, we're gonna push up. So you can see market moved after didn't break this, continued making higher high, and then it gave a sell at the end of the area of liquidity, which was basically a liquidity boundary test, something like that. Then make a sell. Then the pullback, basically, if now we have to use the 1 hour, now you're having this area of liquidity, okay, and the market did what? Rejected, and down below here we're having the area of liquidity in 15 minutes. So you are not going to attempt suicide. I will not talk about this. If there is something which is momentum based on areas of liquidity and power of areas of liquidity, okay, I will talk at the end of the videos on those things. Now, the market actual target took a trade here. Why? A flip. Simple. A flip. If there is a flip below an area of liquidity, I have told you what may happen. And if you look clearly here, you will notice we may mark this as a special case of this. So whatever you detect there was up to you. You can see right there. And the market rejected. Now you are going to trade after the market have rejected this area. Okay, now you are gonna anticipate it to take your trade on 15 minutes, as always. Now after 15 minute shift, then you are going to wait for the market to give you your setup. Okay, now you can see the market shifted to 15 minutes, came down. Now let's check the 1 hour there, shift. Okay, 15 minutes. If you check in 15 minutes here, we're basically having we're having 2 areas of liquidity. The market still may go down. So you may have to take a trade based on these points here or this one. So whatever you choose, but these are the points. I have to observe if there are flips. You can see this candle. This candle has the liquidity for the buy. Now, if you go to check in 5, no flip from that point. There are no liquidities down here. Even this one has been liquidated. Actually, was it liquidated? Let me see. Okay, it's liquidated. So you're having this kind of forming your area of liquidity. Now, if you look, highest point, have ended right here. Why? Okay, so this is the buying point. Okay. If the market doesn't create a new high based on this, you're going to have to take the liquidity. No, there is no liquidity down there. So the market may go actually to the furthermost area of liquidity. This one was already taken. So this is kind of like a laundry retest. Okay. Okay, so now the market may come actually into this week and give a buy. So this one is a little pullback. So now if you consider this, Okay, if you consider here, there are some things I may not say. If you consider here, this area, this was after the free here, you will notice we having some kind of special case on this area, like here. Okay, market failed to confirm it. So we're anticipating a laundry test, but this one seems to have reacted on this. Now, okay, now let's go. Okay, so I'm not anticipating to take the trade on this. I'm anticipating to take it on the lowest level. And after this one have failed, this one is the area which you are supposed to do for the trade. But if you have sharp eyes, okay, if you have sharp eyes to see, this is the area which you have to mostly consider, not this one. Because this one is just kind of a consumption of liquidity on this area of liquidity. So if there is liquidity left here, the market will come to take it, then push up. Now, these things I explained them in the masterclass. The way you think liquidity consumption works, it's not actually the matter. Okay, and if you're in a masterclass now, you see what you see here. Now let's go to 1 minute. If you look here, I'll go to 15 seconds because of the momentum there. If you look and you have sharp eyes, it's already taken. The market may do a round retest or may come on these levels. So that's it. And the market will be done. So you have to understand what the market actually is doing. Now let's go to another pair. Oh, I haven't traded this in a while. Okay, this one is complicated. I haven't traded it for certain reasons because of the how its structure is aligned and things like this. Okay, that's why I don't trade this. If you look here, this pair seems to be bullish, but kind of anticipating to make a new high at that point. Okay. Now, if you look by perspective of that, the pair came down all the way here and shifted, make a new high, then consider like took a flip here. But the issue with myself when looking this pair is that if we are at this level, okay, on the monthly perspective, we are supposed to be coming to these levels. Okay, basically, where are we supposed to be? Here. So I'm bearish on this pair. Now, considering the fact here, highest point, you can see the highest point, market try to break this and have failed a lot of times, and this we are having this area of liquidity up to these areas. So still kind of anticipating to see market move upward. I can't explain here because this analysis may need me to dive more like in the masterclass, but let's look the weekly. Let's check the weekly. Let's play with the weekly. What was happening? You can see we have in the weekly pools at that point, and this pair actually have a small price, I think. These are 2 weeks. No, let's go to another pair. Now let's go to German. Okay, in German we having market can rejecting that high there. Let's go to daily now. Look for our entry. Let's go to 15 minutes. If you look here, this is enough for you guys. I told you this is enough. How many setups you have seen today? You see, we're having how much? We're having that one, and we're having this area of liquidity. Now refine it. If you refine here, go to 1 minute. If you go to the 1 minute, then you observe there is a flip. Basically there, but you have an engineered liquidity. And this engineered liquidity is so plain, so you can mark your entry right there. Okay, it's very plain. Also, you have this, but it's not your free point. So basically put there your entry and you are done. Okay. And then we're gonna just notice. Okay. Well, also let me explain the reason. If you look here, also this is just a normal engineered liquidity, so there is no problem with you. Also, this price is so volatile. So this is 13 pips. Good. And I'm gonna put the 1 hour. Now, since you are coming from the weekly, it's not bad if you anticipate to put your take profit at that point. But this may injure you if you don't understand the regulations. Now, 1 hour, 1 hour shift, you may enter it again by confirmation. That's up to you. You can see the round retest again. That's why I told you have to understand the history of the area of liquidity. So this market again came on this area and did a round retest. Okay, and after that sell, then the market came all the way where? Yeah. So, but before it came all the way there to the daily level, gave you again another confirmation entry, which was this one. Now this also is a flip, so just use it like this, like a special case. Okay, so that was another entry, guys. There is a lot of entries happening, lot of entries. So now taking that. Now listen, if your market is coming from a flip level, you don't have to trade the liquidity engineering or to trade the confirmation unless it's by flip. Then how much pips from there? This is 200 pips. This is also 240. This is 47. So like it's 208 pips. But if you use confirmation for your entry, since it's at pool, you're anticipating the 15 minute, you were out here with 300 pips. Okay, of almost 400, guys. So like here and here, that's basically 800 pips. Okay, and still you're having the buy ones. You're having the buy ones. Now let's go back to the data again. You see, observing here. Let's go back to the weekly, monthly first. Okay, since we have rejected the months, now we have to go to the weekly. Now we have in this weekly gap. If the market reached the 50%, and if it doesn't, there are criteria which my masterclass student can use to take advantage of the move. Now, I have to squeeze a little bit of this. Okay. That's enough. Now, for the masterclass students, know how to take advantage of the move like this. Okay, you know what to do here. If you just look, you can see. Okay, but if not, if you don't see, then you may just chill to expect it as a short-term pullback and look on the weekly again. on this level. So you may anticipate the market to come even further down for you to take the buy. So now here, just chill, anticipating more downward movement. Since on the daily, we have nothing. Okay, and if also, let's check the 1 hour. This pair is not ready for a buy. Okay, it's just still on bearish conditions. Now, after that pair, let's see another pair, which is if if you are meant again to do something like this, actually he is not a trader, bro. He's just a scammer. Okay, now let's see this pair. Also, we having Nzdjpy. This is months now. What do you see? See something like this. So now bulls have reclaimed. Okay. If the bulls have reclaimed, now let's check the 12 months. Now I don't have, I have to use. See the trap. So actually this level, market have bought here, liquidated here, came down, liquidated here. So what are we anticipating? To get a new high, but the market have what? Rejected again. So a couple of months is down. Yeah, we see them now. If the market will respect this, okay, it's have already respected it. So this is something like that. Okay, so simple. That's why we see a reclaim at this point. So this one movement have respected this area. So we're gonna go up now. Check the weekly. Also, the weekly is supporting us. So now we have to go to the bullish buyers still haven't confirmed. Okay, it's gonna be confirmed somewhere there. Now let's go to another pair. Okay, I haven't taken another. I haven't strong trade happen. We have this movement at this point. Go to the daily now. Check. Now go to the 51 hour. Cut here. Now use. You can see you're having the higher high, having the shift point. You're having this area of liquidity. Guys, this was a very strong entry. Now you can look here and see on the 15-minute, you have in the highest point, you have in a shift point, market didn't shift, moved all the way. Now here was your entry. This was just pricing your entry here. So you can take even a best entry on 1 minute at that drive, I think. Okay, you can see. Perfect. You don't need snipers. You need to take the entries which are in accordance. Now let's pull to 1 hour. Now, first to take your profit should be here. Measure the how much pips? 7 pips, guys. 7. Okay. Now leave the rest because those are not yours because you are not in the master class. So you can anticipate taking the somewhere here in the 50% also because you are coming from a weekly. Now you can see now if you did hold the trade from that point up maybe to here 106.50 up to here 200 pips, maybe just put 200 pips like that and wait for if there's no 15-minute shift, then you know if I'm gonna get out of the trade. Okay, yep, so that's it. Simple. Don't have to make trading very complicated, and the market actually did reach that point. After that point, now we need buy. Now on this pair, we are bullish, so we're gonna look for a buying trade again. But for now, check the weekly. We're gonna be going up. Okay, we're gonna be going up. So now check the 15 minutes. You can see we have this area of liquidity. Now before we trade this, now we have to check the 1 hour. If you're in a master class, you understand what I'm saying here. Boom, 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 boom. Okay. After I have broken the high, then we're gonna come for a little dip. But if there is a flip here, then since the momentum is present, then I think the entry is perfect. No, I have to confirm myself. Okay, the market actually have a flip zone, and we're having this engineered liquidity. So basically, coming to buy on those points, it's okay. As you can see, this is just a minor pullback. You're just anticipating maybe take a trade, continuation trade. Then you're gonna anticipate to see the market making a new higher high on that point. But what you are doing now, if you're taking the trade here, let me confirm this first before the market has given any problems. Got to define this so it's perfect, so the market may even come for the second time. Okay, so still the market haven't confirmed the bullish issue, so taking the trade here with caution. The market fails, you may see the market actually going down again. But if it will go and close above, and I'm not talking about, let's end it here. Okay, so let's go to Eurojpy. Now have to check the week. This pair I think is that highest level. Simple. I'm not going to talk about this pair, even this. So I think we have done enough so far. Let me give them colors. So the next recap gonna be on other pairs. I think I talked a little bit on Bitcoin also. I have talked a little bit on Bitcoin. As you can see, this is gonna be hard, and we're gonna have our point above there. Still, the market need to confirm the buyers are in the market. So, guys, also one last thing. What does the YouTube mentorship lack? What does the YouTube mentorship lack? First of all, what it lacks, it doesn't not teach on the issue of liquidity flow. Why? Because I can't expose this. Also, there is a thing of liquidity flow, and people confuse this with time frame coordination. They think like when the market goes to the day, you have to change in 1 hour, and they think that's the liquidity flow. It's not, okay? There is the issue of liquidity flow, and there is an issue of areas of liquidity. There are issue of impure. Basically, it's not an impure like what you know, just impure because it's impure. It's not pure. It's impure for logical reasons. Also, there is the issue which is the issue of liquidity flow, and liquidation complexes. Okay, and so that's why you end up being an intraday trader. On this, because in order to be a swinger, you have to understand the liquidity flow. And just even being an intraday trader, you are not taking profits as you are supposed to because of the issue of liquidity flow. So all those people you see, they say taking the trade TP at high. Basically, most of them, they don't understand the liquidity flow because you have to be specific. Also, I think that's enough for today. And yeah, and see you next time, and wish you all the best, my friends. See you again next time. If you are looking for the mentorship, you can check me on Instagram, whatever you may like or whatever. Okay. So see you again next time.